1, 2, 3, testing. All right. We see the nature of the market is relatively flat. There's a couple pieces of evidence that indicate that. Obviously, the indecisive trading moving sideways is telling us there's no direction in the market. Also, you can see the development of a wedge formation forming in the market. That gives us two pieces of information. One, the market may not be going up, but it's also telling us the market's not going down. So in these type of market conditions, it's very advantageous for the candlestick investor, knowing that there is no direction of the market, to have both long and short positions in the portfolio. Additionally, there was evidence that the markets were not selling off based upon the transportation index. It was moving up strong while the rest of the market indexes were moving sideways. This assumption or this analysis is based upon the fact that if they're buying one index, they're probably not selling off the market because there's not an overall selling sentiment in the market. That there was, when one index is being bought, that usually tells you there's consolidation if the other indexes aren't following. This allows patterns such as the fry pan bottom, as we can see in Papa John's, PZZA, right about the same level that this big fry pan bottom started, is where they're gapping it up with a best friend gap up breakout, putting us in a position where, knowing that the breakouts of fry pan bottoms usually create very strong price moves, could move it back up to where it was trading before, back up close to the $58 to $60 range. As you can also see, when the markets in general were trading sideways, the fry pan bottom pattern was working effectively. That same scenario could be seen very well illustrated in big lots. Notice the bullish engulfing, kind of the doji sandwich, fry pan bottom JHook pattern. That pattern breakout or that pattern movement was being progressing even when the market itself was trading relatively flat. The reason a pattern works so well is because it is the accumulation of buying and selling that has been going on for a longer period of time, creating that pattern, which usually involves already knowing which direction the overall market has been moving. And the JHook pattern could be seen clearly setting up also an Abercrombie Fitch ANF based upon the inverted hammer, bullish confirmation, and the illustration that a JHook pattern was in progress. If it breaks out through this level, wave 1 and wave 3 should be the same. And having a short position on, or short positions on, during this market trend is also reasonable, because if there's a lack of market direction, that tells you that each individual candlestick chart is going to work effectively. So our short on SMAR has been working well. When do you take profits? When you see a buy signal. As illustrated in ZUO, when we shorted based upon the bearish kicker signal, but when it got down here to the first technical level that everybody might be watching, like filling the gap, and we saw this long-legged doji in the oversold area, that told us it was time to take profits based upon a signal reversal at a level that everybody else was watching. Candlestick analysis, again, is merely the graphic depiction of what is occurring in human nature that is moving prices effectively, because human nature has not changed for 400 years and probably will not change for another 400 years. That'll be it. We'll see you in the chat room.